Now it's time to look at the disruptors. George Sillis is with us, senior markets correspondent here. Taking a look at First Solar. Some positive comments from Morgan Stanley, right, George?
Yeah, Nicole, the stock is performed exceptionally well. If you look at it over the last 30 days, it's up like 39%. And this comes on the back of, earnings which were published back in early May when we talked about this stock. And there was obviously some valuation gap, I'll call it that. If you look at the earnings estimates for the company, which was published for 2024 at basically over $14 a share, it was really cheap, and it seems to have filled that valuation gap. Now, Morgan Stanley still maintains an outperform rating, and they moved their price target to $331 because this company, from a standpoint of solar, really isn't exposed to where the challenges are, and that's the residential solar market. There's been too many solar producers out there. The residential installation market has been relatively soft because people are just trying to get into homes, let alone add or install solar into existing homes, which we know from an existing home standpoint has been relatively sluggish. And effectively, when you look at First Solar, they're actually not exposed to the residential market. This is a company that's exposed to the commercial and industrial and the utility grade markets. And if you look at things like the Inflation Reduction Act and all the tax credits from a manufacturing and installation standpoint that First Solar has received from the utility standpoint, their earnings estimates have been relatively robust, even going through 2025. But as I noted back in May when they reported earnings, there seemed to have been a valuation gap where the stock was trading at a very low multiple. Back then it was around 13 times earnings, and now it's around 20 times earnings, which is right in line with its 5-year historical average. So it seems like the calls by Morgan Stanley and even Goldman Sachs, by the way, maintains a buy rating with $302. And I think it's really based upon the visibility that First Solar provides the marketplace, at least for investors, because of the utility grade installations, which are, again, locked in contracts from utilities, which essentially utilize public tax money to increase their solar installations.
Yeah. The whole group is down today, as we see. So it's just a little out of favor in the big picture. So that may be another reason why, even with the overweight, that it has this down arrow. Let's talk about the example trade, please, George.
Yeah, so if you look at the stock price, it's made a remarkable move in the past 30 days. It's up about 39%. So stocks typically follow an 80-20 rule where they'll make 80% of the move in 20% of the time. So with that said, I think First Solar right now might be fully valued, and it may just be stationary. In other words, just trade sideways for at least in the near term, maybe the next couple of months or so. But it also could continue to trend to the upside based on the financial fundamentals. So with that said, what I'm going to do in this case is just harvest some yield. If you look at the price relative to the 10-period moving average, which is around the $260 area, it could certainly drop to that level, but still be intact from a trend standpoint. So I'm just basically going to sell a June monthly cash secured put, the 260 strike, and you can actually earn about $6 a share or $600 a contract by selling that. So if you sell this put, you have to be willing and able to take ownership of the stock at $260. That's 100 shares per contract, but your cost basis is basically $254. So with that said, the stock can move, about $17 to the downside before break even. So it's a bullish trade, but it'll capitalize on the stock just moving sideways because that $6 premium will erode to zero by expiration in 17 days if the stock holds the 260 area or higher.
Yeah. And look, on this same day that Morgan Stanley is putting overweight here, and thank you for that example trade, on the same day you have GLJ Research reiterating a sell on SunPower, and that's down 9%. So it's hard for a name like this one that seems to be one that Morgan Stanley views favorably because GLJ has been noting SunPower and pulling on a loan and all that. So that one's to the downside. So real dichotomy of what's happening in the group. George Sillis, nice to see you. Thank you.